me what you're doing at TIAA. Let me switch gears, because you really are a leader on helping Americans save and invest comfortably for retirement. I know you have a white paper on this right now, and we want to get to, but what have you seen at TIAA this last decade?
What I've seen this last decade, after the crisis, obviously, is a gradual intake in savings, but people are also uncertain about the future. And so while we are, in our company, recognizing retirement comfort, I think, broadly speaking, in America, there's a lot of discomfort and uncertainty about the retirement outcome.
Which is why you say there are three big gaps right now. The coverage gap, not enough Americans have access to a savings plan like a 401k. The savings gap, people are not saving enough money. And the guarantee gap, managing savings after retirement to avoid outliving your money. So what do you want lawmakers to do about this?
Well, look, confront all three. And so first, lawmakers and the private sector have to get more people enrolled in savings. Individuals have to save more. And then on the last one, the guarantee gap, which is the new thing that we've talked about, lawmakers and companies need to take advantage of tools that are out there, such as annuities, which can, in fact, close down the guarantee gap.
Your clientele, members, however you call it, the investors, are long-term thinkers.
Absolutely.
So are they getting nervous about these wide swings, this return of volatility?
No, what we've seen among our participants, as we call them, in fact, is a degree of comfort because they are long-term investors and because they recognize that we as a company have a great track record. You may know that we've just won the Lipper Award for the 6th year in a row, unprecedented, and that's a reflection of risk-adjusted returns over a 3-year time frame that's been very, very strong. And so our participants are relatively calm in the face of market volatility and uncertainty.
So they're not doing anything right now?
They're not doing anything
dramatic. Keeping their money safe?
Keeping their money safe, not making dramatic moves. And we always say, because they're long-term investors, do not attempt to time the market, do not overreact to temporary volatility.
You are also just out with a white paper on infrastructure.
Yes.
And paying for it. The paper details how insurance companies, including yours, are interested in participating in financing. How do you participate in financing?
Well,
how do you get involved?
Look at our general account. We have a general account, that's the insurance pool that we invest, of about $250 billion. About 8% of that is invested in real assets. If we look across the industry, there are billions and billions of dollars that either are invested or are waiting to be invested in real assets. There are some technical fixes that have to be done, particularly at the state level, to open up that pool of money. But as the president's talking about public-private partnerships, the private end of that may well be insurance companies that are big, long-term investors, appropriate for an infrastructure kind of investment program.
Well, there's got to be a big opportunity for financial services companies to get involved and get a piece of this infrastructure plan. Talking about, what, $1.5 trillion,
Absolutely.
$200 billion of federal money.
Absolutely. There's no doubt that this is what needs to be done, and it's been done around the world. In many places, you see major infrastructure, ports, airports, roads, et cetera, bridges. All of those have some private funding as well as public funding, and it can be done safely. But we do need to get all of our regulators lined up around doing this the right way.
How worried are you, and how much do you think about the budget issues? I mean, here we are talking about more spending on the heels of this, big spending plan announced by the Republicans a week and a half ago. How do you pay for all of this? The debt now at $20 trillion, right, above $21 trillion almost.
Right. So I think all of us have to focus on that because we have an upcoming challenge around paying for all of retirement for all of us aging baby boomers, so Social Security, Medicaid, et cetera. All of those things we have to focus in on.
Yeah, in terms of where people are and whether or not they have those safety nets, that's something that you do every day to try to ensure that they do.
Absolutely right. And all that's going to lead potentially to a bigger draw on the budget in the near term. And so we have to be very mindful.
So TIAA turning 100 years old. I like the way you're celebrating. Financial services company giving away $1 million to celebrate?
Absolutely. So what we're looking for is what we call difference makers. We're going to identify 100 people in the not-for-profit sector who are making a difference in local communities, regionally, or even nationally or globally. And for those 100 activities, we're going to give $10,000 each to those charities. So $1 million supporting people who are trying to make a difference in the world.
That's terrific, Roger. Congratulations on that.
Thank you very much.
Your time running TIAA CREF, how did it differ than your time at the Federal Reserve and what you've done in terms of big economic issues for the country?
You know what? In many ways, it's very similar.
Yeah?
So the Fed is very focused on sustainable growth, keeping inflation low, maximum sustainable employment. We were very focused on financial security for millions of Americans and focused on the big social problem of the day, which is retirement, among other things. And so I look at my decade thus far at TIAA as being very, very much a public policy issue as well as a private sector issue.
Do you miss the Fed, Roger? There's some talk that they want you at the New York Fed. Lots of changes going on at the Federal Reserve. Jay Powell running things now. Would you accept that job?
You know what? I love the job that I'm doing. It's the most important thing I can imagine doing right now. There are many interesting names being floated for jobs in Washington and here in New York, and I wish all of those folks very, very good luck.
What can you tell us about Jay Powell and the way he will approach leadership at the Fed versus Janet Yellen?
Look, I've known Chair Powell since 1982. Very stable pair of hands, very thoughtful, collegial. I think you saw his early testimony. Smooth, professional, unruffled.
Seems very comfortable in the job.
Very comfortable in the job. Good selection and off to a good start.
All right, we will leave it there. Roger, it's great to see you. Thanks for all that you're doing for retirement and the health of this country.
Maria, thank you very much. It was a pleasure talking with you.